Okay, good morning, everyone, and welcome to today's presentation. Thank you for taking the time to join us today. My name is Barbara Da Fonseca. I am the principal of the company, and I will be presenting with you with John Stewart today. He is our small business trust and estate tax specialist. He has been with our predecessor firm and BDCA for over 20 years now and has an enormous amount of experience in the areas of taxation and matters that pertain to today's presentation. As you know, the topic is Home Office and T4 reporting for 2020. Our goal, as always, is to maximize your wealth at BDCA. Today's presentation will do so by educating you on the deductions that are available to help you reduce your personal tax liabilities, as well as to help the employers that are attending today to be compliant with their payroll reporting requirements that have changed for this year, and to ensure that no penalties and interest is charged to those employers. A few housekeeping matters to take note. Today's webinar is being recorded and will be available on the website likely next week, towards the end of next week. We have muted everyone's microphones so that there is minimal distraction during the presentation. We also do encourage you to ask questions using the chat function. If you have never used the chat function before, you can look for the chat box on your Zoom menu bar, which is normally located at the bottom of your screen. It is normally located between the polls and share screen icons. If you don't see it there, go right to the end of that menu bar. There should be a more icon, select it, and you should see the chat box. When you open up the chat box, you'll notice that it defaults to everyone. Please keep it that way so that the whole group can see your questions, so we don't have multiple attendees asking the same question. And again, we do encourage you to ask those questions during the presentation, and we will answer them at the end. Okay, so thank you very much, everyone. And I'm going to now pass this off to John.
Good morning, everyone. I hope you're all well and staying safe, and thank you very much for attending the presentation. As Barbara mentioned, my name is John Stewart, and for those of you that I've either talked to over the phone or spoken with live in meetings when we used to have those, hello, and for those of you that have never met me or spoken to me, hello to you too. I'd like to mention that this presentation focuses on the new changes that occurred due to the COVID-19 pandemic. I should mention that the CRA has provided new guidance on their website for 2020, and that you can use, which you can use to go through your own specific circumstances. We will provide these web links in a follow-up email after our presentation. We are also happy to discuss any questions you may have. There are countless scenarios, however, that relate to home office deductions, and we are unable to answer, if we are unable to answer your question by the end of the presentation due to time or other complexities relating to your particular situation, we ask that you contact us after the presentation so that we can guide you appropriately. And with that, I'll get started. So the CRA has come up with a couple of different methods this year for claiming home office expenses. Oh, forgive me, I've jumped ahead. Barbara's already discussed the agenda, but I will mention that in the agenda there's two methods, simplified and detailed. And if we skip to the next slide now, we'll see that we're discussing the simplified method first. The CRA also calls this or names this the temporary flat rate method. And I should also like to mention that along with guidance that CRA has provided with Home Office, they are also providing calculators on their website. So that will hopefully help people figure out the calculations that they need to do. I will take you through some of them, but as mentioned, there's different scenarios for different people and each scenario is unique. So you'd want to check out the website yourself. So for the simplified method, CRA is allowing a $2 per day to a maximum of $400, which would be 200 working days. And this is where CRA has decided that from the beginning of the pandemic, when things were shut down, they have figured that there's 200 working days to a maximum. So for instance, if a month has 20 business days in it, that would be a $40 deduction for that 1 month. So the rules state that obviously it needs to be due to COVID-19. And you worked more than 50% of the time from home for at least 4 consecutive weeks. And what that means is that CRA is basically has that as a starting point, that you had to have worked for at least 4 consecutive weeks. So you can claim the deductions for those days, the $2 a day for those days. And then if you worked additional days after those 4 consecutive weeks, you can add in those days as well. You do not have to calculate any workspace details. There are no supporting receipts required, and your employer does not have to fill in the T2200 or the T2200S. So just so everyone is aware, the T2200S is a shorter version of the existing T2200 that has been around for many years. And the T2200S is specific for working at home due to COVID-19. The T2200 is a standard declaration form for conditions of employment. Now, both of these forms, the employer completes, the employee does not complete them. Next slide, please. So what counts as an allowable workday? So you would have to work full-time from home, full-time hours or part-time hours. If during the pandemic you had any days off, vacation days, sick leave days, or other leave or absence days, those days do not count as work days, even though you might think they would if, because you're getting paid for vacation through work, you actually have to be working those days, so no time off to be able to claim the deductions. Next slide, please. So with the detailed method, again, it has to be due to COVID-19 or your employer required you to work from home. You worked again for more than 50% from home, and again for 4 consecutive weeks. And now you have the T2200S form signed by your employer. So now you're asking possibly, how do you calculate your home workspace? I do have a couple of examples coming up, but the things you need to keep in mind are, you would think about the finished areas of your home. So if you don't have a finished basement, you wouldn't include that. And most homes do not include the basement footprint when talking about the square footage of a home. Then you would measure up the finished areas of that home. And of course, the area that you're working in must be reasonable. In CRA's eyes, that's something that they are very conscientious about, reasonability. And unfortunately, we don't always know what that is. The CRA, as I mentioned before, has a calculator to help determine the percentage that you'd be working from home. There are also some instances this year where more than one person was working from home, possibly 2 spouses are working from home, or there could be more than one family member or multiple family members working from home if parents and kids are all working from home. You need to figure out if there's a designated space, being a separate office, if you have a spare room that you could designate as a space that's only used for work purposes. Next slide, please. So again, how many workers are at home? Is there 2 or more? Do you have separate workspaces? Is it a shared common workspace? If it is, you need to calculate the shared workspace square footage and then apply your appropriate portion. So if it is a 50-50 split, then it would be 50-50. If it's 60-40, you would work on those ratios. And again, you would have to apply your specific hours worked. If it is a shared designated workspace room, then you need to share the workspace square footage and apply the portion thereafter. So the first example I have on the next slide is to calculate the percentage of time you can claim for common shared areas or a designated room. So in this example, if you were to work 40 hours a week in a common area, so let's say this is the dining room table, or a common room that's used for other items or other events, you've only worked 40 hours during the week, but that area is available in the house for 168 hours per week. And you would then take 40 divided by 168 and multiply by 100 to get your percentage, which would only be 23.8% of time that you can claim for your workspace. If you have a designated room, it makes it easier because 40 hours a week, it is 100% deductible that you can, 100% claimable that you can use as your as your designated room. Next slide, please. So in this example, we're showing that if you have to use a dining room a dining room table as your workspace. So due to the COVID-19 pandemic, Sam has been working from home using her dining room table. The dining room is 12% of the total square footage of her house, and she uses it to work for 40 hours out of a total of 168 hours in the week. Since the dining room is not only used for work, Sam will need to calculate the employment use of the workspace. So 12%, the size of the room compared to the entire finished area of the home, times 23.8%, which is the 40 hours divided by 168 times 100, equals only 2.8% of the time that it can be used for homework, for a workspace. So if Sam, in a month, if Sam paid $1,200 for rent during the period of time she was working from home, which included, rent, electricity, and water for the period of time she worked from home because of COVID, the employment use portion is $1,200 times 2.8%, or $33.60. So using this detailed method above, if Sam worked from home from April 1st to December 31st, and the rent is $1,200 per month for 9 months, the total is $10,800 for that period. Then you multiply that by 2.8%, providing a total claim of $302.40. Based on the simple method, not using this detailed method, working from home from April 1st to December 31st, and let's say she worked 20 days a month from home, then her claim would be $360, 180 days times $2 per day. So Sam would actually benefit better from using the simple method rather than the detailed method. Next slide, please. So there are some expense limitations, and what we should mention is that if you needed to get a cell phone to work from home, or a house phone because you didn't have one existing, the connection fee that you paid to have that set up would not be deductible. You can claim long distance calls if they relate to business, and you can claim the employment use of a basic cell phone service plan. I should mention that with a service plan, if you are paying for unlimited service and you were paying that prior to the pandemic, you're going to have some homework to do, because you're going to have to scrutinize every bill that you have. And I know for my instance, it's 14 pages that lists all the phone numbers that I've made. You're going to have to scrutinize that and then figure out as best you can how much of your phone related to business versus personal. When we talk about internet, again, if there was a connection fee, you cannot claim that, because if you did not have internet existing in your house before, you can claim internet access fees. But again, I should mention that if there's no incremental increase in those fees, it might be very difficult for you to substantiate a claim for internet costs. I don't know if anyone's internet provider supplies your surfing, where you're going back and forth, and if it's related to work or if it's not. I'm not saying you cannot claim some of your internet expenses. It's just something that CRA potentially will scrutinize. At this point, we don't know how they're going to be looking into proof and that sort of thing, but you want to make sure you have all your ducks in a row. The other thing I should mention is that you cannot claim the fees related to renting the modem or router. Usually that is segregated on a bill. So for condo fees, if you're able to claim in the detailed method, you can only claim the portion that relates to your utilities, heat, electricity, and water. And unfortunately, not everyone knows what portion of their condo fees include that. So you might have to contact the condo administrator unless some of the condo corps are providing information like that because of the pandemic. I don't know, I've not heard whether it's been mandated, but it is something that you would have to investigate and find out. And if you are paying separately for the meters on any of the electricity, heat, or water, you cannot claim condo fees. Next slide, please. So the new form one of the new forms that's introduced this year is the T777S. And this is, again, specific to the pandemic. And it does get completed on the tax return or within the tax return for both the simplified method and the detailed method. For the detailed method, you can only complete that area using the specific expenses that are listed on the T77S. You do not use, if you are claiming anything in addition to what the eligible expenses are listed. If you were eligible, so what this means is that if you were eligible to claim employment expenses prior to COVID-19, say automobile expenses and other expenses, that you would still be able to do that, but you would use your existing T777 and you would also be receiving a standard T2200, not the special T2200S. Next slide, please. So the T2200S, the taxpayer should request from an employer only if the taxpayer is selecting the detailed method. Again, you do not need this for the simplified method. And as I understand it from an email I received from a client today, their employer is already supplying it to all of the employees that worked from home, so they're not having to request it. Now, you need to keep this in hand for CRA if they request it. It is not a form that gets filed with your income tax return, especially when we're electronically filing it. But with new rules this year, the employer may sign the form electronically. Historically, the CRA has always wanted to see real signatures, and they have kind of relaxed these rules during the COVID-19 pandemic. And the nice thing about this T2200S is that it is short and simple. Next slide, please. So the comparison of the two different methods, it lets you know that the simplified is very simple. It's just that calculation of the number of days worked from home times the $2. You do not need the employer signed form. You do not have to keep receipts. You do, however, have to complete the T777S, or we would complete it during filing your return. It is an optional method. You could use either the simplified or the detailed. You're not fixed to one method or the other. But again, it is critical to mention that you must work from home for at least 50% of the time for at least 4 consecutive weeks. And the last thing I'd like to mention is that, you know, the 50% of the time, I could not find any real guidance on CRA's website as to what they would constitute 50% of the time. But I would think, and you know, unfortunately, I don't know this for sure, but I would think that if you worked 2.5 days or greater than 2.5 days from home, that would constitute 50% of the time for at least 4 consecutive weeks. Okay, so next slide. So what I'd like to say is that before you come to us, it might make sense for everyone to take a look at what method they think they could best use. There are some instances, obviously, that I showed that it may make more sense to do the simplified method, which would mean if you had to scramble and try and find expense receipts or other supporting documents that you may not have saved during the year, it might make sense to use the simplified method. That being said, if you do have the information and you can do a rough calculation to find out whether you'd benefit better from the detailed method, then that's great, and you can supply us with that. If your employer reimburses any of the expenses, they are not deductible. You can only claim expenses for the period of time that you were at home in the workspace used. So only from home from March onwards. So you cannot include anything from January or February. And even in March, the pandemic, if I remember correctly, started on the 16th or 17th of March. So you're not even getting a full March unless your work knew about it before and told everyone to start working from March 1st. So you can only get deductions against employment income that you incurred the expenses for. So if you have multiple jobs, for instance, and you have a part-time job and your full-time job is where you were told that you had to work from home, you could only claim employment expenses against your full-time work where you were designated to work from home. You cannot create a loss if these expenses are greater than your income, and you cannot carry forward any excess amounts of the expenses. For commissioned employees, just as a reminder, expenses cannot be greater than the commission income. And they can also claim home insurance, property taxes, and leasing costs. But please remember, above all else, everything must be reasonable in CRA's eyes. And with that, I will pass it over to Barbara.
Okay, thank you very much, John. That was great. So now I'm going to take us through the second half of the presentation. It's going to focus more on employer reporting requirements. This year, you're going to see some new forms and new formats on the T4s specifically. There are more boxes and codes to complete. And please note that all employers must complete these new boxes and codes. That's all employers. And why do we have these new codes and boxes to complete? Well, this is simply to help CRA audit the CEWS, CERB, and the CESB subsidy programs that all the Canadian dollars that were distributed during the year. We all know that billions of dollars were handed out to taxpayers, and now CRA is going to audit them and make sure that everything is squeaky clean and that taxpayers receive what they should have and not in excess. So in terms of the T4, most of us recall that box 14 reports all of the employment income that's paid to an individual during the year. This is still the same situation. We still have box 14 that is going to report all of the employment income, and I'll show you a sample on the next slide. Additional reporting requirements this year. We have 4 new codes, 57, 58, 59, and 60. They are all to report employment income paid during the specific periods listed on the slideshow right here. So for example, if an employee was paid employment income during March 15th to May 9th, that's an 8-week period, the employer has to report that portion of employment income in code 57. It's the same thing for the next 8-week period. May 10th to July 4th would be reported in code 58. And then we have again code 59, which is the next 8-week period. And finally, code 60, which is just a 4-week period ending September 26. Some of you may think that these dates sound familiar. Well, yes, they are very familiar. This is the exact CERB reporting period, March 15th to September 26th. So this essentially is going to make it easy for CRA to see, they have in their records who has received CERB, and now they're going to know how much money did these employees make, and they'll be able to determine if they didn't qualify and they received and demand repayment of the CERB. Again, a reminder that you have to report what is paid to the employee during the periods listed above. So for example, if we have a pay period between April 25th to May 8th that is paid to an employee on May 14th, then you must report this amount in using code 58, okay? Code 58, because May 14th falls during that period, May 10th to July 4th, okay? We don't care about the pay period end date, it's the pay date. And then of course, what do you do if an employee was not paid anything during one or all of those periods? Well, you report 0, okay? On to the next slide. We have an example company. It's Hotcakes on Wheels Company. Wouldn't that be nice to have some hotcakes driving around town that we could buy? Jim Hotcake is our owner, and he is paid $10,000 every month for a total annual salary of $120,000. Most of us are aware that if you're the owner of the company, you're EI exempt, and he is still remitting CPP. So here is Jim's sample T4. We can see at the top, box 14, where the usual total employment income paid during the year is reported. Now let's look at the bottom portion of the T4 that has these new codes, 57 through 60. Again, we are reporting what was paid to Mr. Hotcake during those specific periods, and just a friendly reminder that the last period is a 4-week period, okay? So he received $20,000 for the first 3 8-week periods and half the amount for his last 4-week period. Okay. Since we're chatting about T4s this time of year, when preparing the T4s for employees, we need to think about taxable benefits. And just as we have so many new special rules as a result of COVID for 2020, we also have special rules applicable to taxable benefits that we need to consider. The 3 main ones we're going to discuss today are commuting costs, employer-provided parking, as well as computer and home office equipment. So in terms of the commuting costs, what we're focusing on here today is additional commuting costs that were incurred as a result of the COVID-19 pandemic. CRA specifically listed on their site that these are additional commuting costs to minimize the risk of the employee's exposure during the pandemic. So we all know that some workplaces were closed and some were not closed. If a workplace was not closed, there were many employees that still had to go to the office and were still commuting to go into the office. Or for those that were closed, some still had to go to obtain their office equipment and other files, other items to help them work from home. In either case, whether the workplace was closed or not, these additional commuting costs that the employer is paying for or reimbursing to the employee are not taxable to the employee. Okay, so please ensure not to tax the employees on any payments for these additional commuting costs. On the topic of employer-provided parking, many of you are aware, and maybe perhaps not aware, that in many instances, employer-provided parking is taxable to employees. However, this year, a lot of employees could not, or 2020, a lot of the employees could not go to the office, or they were not allowed to go to the office. So CRA is allowing that for the period of time where they could not go or were not allowed to go to the office, that they will not be taxed for the parking benefit, okay? And the last detailed discussion re taxable benefits, the computer and home office equipment. I suspect most of you are aware of the first $500 that employers paid or reimbursed to employees for computers, desks, chairs, etc., computer and home office equipment is not a taxable benefit to employees for 2020. However, employees must submit receipts to substantiate this. Also, if the employer decided to reimburse, let's say, $1,000, so more than the 500, and the employee did submit the receipts, that excess of $500 would still be taxable to the employees. If an employer decided to just call it a home office allowance and write a check to an employee for $500, but it's not accountable, and the employer did not require any receipts to be provided, then that would be taxable. Okay, so the key thing is $500 and submit the receipts. I have a couple of slides up here on meals and entertainment, and then cellular phone and internet services. These are typical taxable benefits to employees. However, I'm not going to spend time going through them because these remain unchanged from prior COVID times. So there are no special new rules in place for these types of charges. Okay, but I just wanted to make you aware of this, as well as the presentation will be posted on our website, so you can download the slides or you can go to CRI's website to review them. I wanted to mention to the employers that are in attendance today, I know that the taxable benefits, they can be really tricky, and then you wonder, do I have to deduct CPP and EI and remit those to CRA for taxable benefits to employees? The Employer's Guide, the Taxable Benefit and Allowance Guide on CRA's website, it's T4130, has a very, very useful chart on pages 44 and 45. I'm showing you a little picture of it right here, and it lists all of the available taxable allowances and benefits and specifies for each one whether or not you have to deduct CPP and EI, and as well it lists which code that you have to report this benefit in. Usually it's code 40, but it does list all of them, so it's very, very useful when preparing the T4s and trying to determine if something's taxable or not. Okay, we're now on to the new form that was created by the government for 2020 reporting purposes. This form is required by anyone, any employer that has claimed the TWS, that's the temporary wage subsidy, that is in place for 10%, that started in March and ended in June last year. So again, any employer that has already claimed the TWS, or they will claim the TWS, or they didn't even claim and they don't plan on claiming it, but they have claimed the CEWS, have to complete this form, okay? When does it have to be completed? Well, the sooner the better. Ideally, before you submit your T4s, if not at the same time or shortly thereafter. The reason being that you want to get this to CRA as soon as possible is you have withheld some of the tax deductions that were supposed to be sent in because you felt you were eligible. The company felt that they were eligible. That results in a discrepancy on the T4 summary. This PD27 explains the discrepancy to CRA and prevents them from sending you demand letters, charging you penalties and interest for a discrepancy, which you know is not a true discrepancy, it's a valid amount. So that's why it's key that this form is sent in. Again, if you claim the CEWS and you're choosing not to claim the TWS, there's nothing wrong with that. However, you still have to fill out this PD27 form. You must enter 0 in Part D, and I'll show you a sample in the next slide. If you do not literally fill out this form and tell CRA that you are claiming 0 for the TWS, it is potential that they will assume that you claimed the maximum and demand that you repay some of your CEWS subsidy that was provided. That's what we have been advised. So it's very important to complete the form with a 0 if you do not plan on applying for the TWS, but you have for the CEWS. So here's a sample of a section of the form. The form is pretty straightforward. It is 3 pages long. The first page is instructions. The second page lists, company name, company address, and the payroll account number. And then it lists this section where there are the details of the pay periods, as well as the gross remuneration to the employees. And this is a sample for you that I have completed for those employers that did not and will not apply for the TWS. Here you can see the zeros highlighted in yellow, and you can just put from March 18th, the beginning of the TWS period, right to the end on one line, June 19th, the way I have shown you there. If, for example, you had claimed the TWS on each reporting period, then you would list each one separate on the form here, okay? Also, I want to show you the additional comments section there. That's an important section for you. One thing that to note is the form requests that you note the number of eligible employees for the TWS claim. But we all know that during the different periods that some companies were terminating staff, some companies shut down in total, and other companies were hiring. So the figure, the total number of eligible employees could change for each period. My suggestion is to put down the comment here that the total number of employees that were eligible, the maximum during the period were, for example, 7. However, during the month of May, there was a low of 4. That's just an example for you. Okay, so again, this additional comment section here, this is a very helpful section for you to communicate with CRA. Okay, on to this next slide here, that additional comment section that I just mentioned. If you're choosing now to apply for the TWS, there is some cash that CRA will likely owe you. So you'll use this additional comment section to advise CRA whether you would like the money refunded to the employer now, a check sent or direct deposit, however you're set up with CRA, or if you want to transfer it to the employer 2021 payroll account. So that is up to you, and you can specify on the form in the additional comment section. Another matter to think about is mail. You can always mail this form to the address that's listed on it. However, we know that mail is not the most reliable source. It can take quite a bit of time, and you can submit this online through your My Business account, or you can have us, request us to submit it for you through Represent a Client. When we or you submit this form through CRA's online platform, we get a confirmation that it's received right away. We can save that confirmation for you, and it's a great record. If this form gets lost in the mail, well, that's not so much fun. And again, you want this submitted to CRA as soon as possible, because if there's money owing to you, you'd like to get it sooner than later. And you also want them to know that if there is a shortfall in what was sent in, that it's valid. CRA has stated that if there are errors on this form, they may charge penalties and interest. Do you like that word, may? Maybe, maybe not. But this is what they're disclosing right now. These forms, again, try not to file them after the T4s or file them soon thereafter. Currently, there is no penalties or late filing charges. However, again, if you're claiming the 10% TWS now, it may delay processing if you submit the form afterwards. So what happens if you've already sent the PD27 in and you need to amend it? Again, CRA is silent in terms of amending the forms. I suggest submitting the amended form in, placing in the additional comment section that this is an amended form that replaces the previous form submitted on X date. A very, very important fact for all of you that are paying companies such as ADP, Ceridian, WagePoint. There's so many payroll companies out there. It's highly likely they have not and will not submit this form on your behalf. We know for sure that ADP is not submitting these in. It's up to the employer to complete it. And again, all employers must send this form in. So please double check with your payroll provider. Don't assume that they're sending it in on your behalf. In conclusion, be prepared for an audit. We know there's billions of dollars were distributed. We know the government needs cash. There's significant amount of government debt out there. They will be auditing. We know they've been auditing the CEWS programs already. We know they've sent out those CERB letters out, trying to get those that have potentially received and claimed CERB in error to repay it back. There will be a lot of audits. Please keep detailed records, spreadsheets, employers for your TWS claims, spreadsheets to support everything. Take advantage of the home office deduction if you qualify. Like John said, determine which method is best for you. And maybe the $2 a day method, is only going to save you $10, but it may save you several hours of stress. And in terms of an audit, there's much less work that needs to be done to prove to CRA that you're working from home. Send in your PD27, complete your T4 additional box info. Again, even if they're zeros during those periods, please place a 0. If you haven't filed for your TWS yet, and you now know that you still can, because a lot of companies don't know that they still can. They think it's closed and it's done. There still is time. We are here for you. Call us if you have any questions. And with that, this part of the presentation is done. And I am now going to look to the comments that we have in the section here, the questions, and we will go through them. Oh, there's not too many, I see. Okay, well, here we go. John, I don't know if you can see from Nisha on here. She has, in terms of the home office deduction, she's working in an open space area, a studio. So there's no separate rooms, so no separate designated space. Works at the dining room table, but can never have dinner there. So she's only working 40 hours a week, but has not been using the dining room table since this pandemic started. Okay.
Yeah. So I don't know if CRA would question this. I would guess that they probably would, just because you're using this table during the pandemic, and you say that you never eat dinner from there. Unless it's a designated room or a designated workspace and it's not a common area, I think it will be very difficult for you to prove and substantiate to CRA that it's not used for anything else, even though you have everything sprawled all over the table related to work. I don't know. I mean, the risk is yours if you want to pursue taking your position and then explaining to CRA after the fact. There's no guarantee that you will be audited or questioned on it, but there's also no guarantee that you will not. So you just need to make sure that you have all your ducks in a row to answer all the questions that CRA will ask you.
Okay, that's great.
I have a question that was directly sent to me.
Okay.
So I will read that. So
Okay.
do we have any comments on office equipment purchases? So if you are an employee and you have been provided with a T2200S or a T2200, there is no room for equipment purchases in home for home office. So if you set up your home office to specifically work there during the pandemic, unfortunately, the cost is bared by you and you cannot claim that. The only items that CRA allows expenses of that sort would be if you are a musician and you need your musical instrument, they allow you to purchase a musical instrument and then it has to be depreciated over time. If you are eligible for the T2200, the standard form, and you're able to claim automobile expenses, then you can set up either a vehicle or a passenger vehicle, which is either class 10 or 10.1. And again, that depreciation is eroded by the business use over your total use. So unfortunately, there is no room for office equipment purchases. There is that $500 that Barbara mentioned, that if employers are providing a $500 check or money, excuse me, funding for you, you would provide them with the equipment costs and purchases. So that way it wouldn't be, you wouldn't be out of pocket. I see another question about we need to list utility expenses. So for both on the T777S. So if you're taking the simplified method, you don't have to list any of those expenses. You are just claiming the $2 per day for the days that you worked at home. And then the next question is, what are reasonable expenses to calculate? Well, the expenses are listed on the T2200S, and we've covered most of them in the presentation. But if there are expenses that you're unaware of, they're on a link from CRA, and we will be providing in our follow-up email to everyone some links to CRA's website specific to these areas.
Mm-hmm, mm-hmm. I think in general, John, what are reasonable expenses to calculate? If we think about the amount, what is reasonable, CRA will look to each type of employment to see what is more reasonable than not. In terms of, just an example of if we're looking at someone, a commission employees that might be able to claim meals, for example, well, the restaurants will shut down for most of the time. So CRA would expect that reasonable meals for the year would be a lot less during 2020 than the prior year. So they will look at the type of job and of course take into consideration COVID specific situations that would have an impact on certain expenses increasing or decreasing. Like this year, really, yes, certain expenses have gone down, but a lot of individuals and employers have higher telecommunications costs. So CRA, it would be reasonable that businesses and individuals in general would incur higher telecommunications costs. But again, they will look at each taxpayer's individual circumstances to determine what is reasonable for them, because it might not be reasonable for somebody else who has a different type of employment. Okay. And John, based on what we know about the two home office, the simplified or the detailed methods, is there any black and white, like definitely the, everyone should use the simplified method versus the detailed, or is there anything that, if it's over a certain amount, then you should always use the simplified method because of XYZ, for example?
Sorry, I'm just rereading that. I apologize. Someone had sent me a direct message, so I was answering them. I apologize.
Okay.
So based on what we know of the home office expense calculation. Sorry, where was that question again? I really apologize.
It's right here. Yeah. So based on what we know with the simplified and the detailed methods, do we have any guidance on which scenario we should pursue that makes more sense? Do we have a default that, we should always use the simplified method versus the detailed method? Or for example, if you're a truck driver, you should always use the detailed method. But if you're an IT employee, that we've realized that the simplified method is best. Is there anything like that we can share with the attendees?
I think that, without, telling everyone to go to CRA's website, I hate to say that, but that seems to be the best case to figure out what your position is. They actually have on their website, it's like a decision tree where you go through and they ask you questions, and based on your responses, it directs you to the particular method. So I would say, though, in the instance of Sam that I talked about earlier, where she was working in a common room that everyone has access to and is used for multiple things and not just her work, it might make sense to just look to the simplified method.
Mhm.
But you never know in the expenses that she's incurred. I mean, $1,200 per month in rent is not a large dollar for rent in Toronto. So if you are paying $3,000 a month, maybe it would make sense for you to do the simplified method, the detailed method, because you might get more bang for your buck with that one. I think it's an individual decision that you need to go through on CRA's website. I will say that along with a lot of the items that CRA has brought out during this pandemic that has not had the best follow-up and information being supplied, they've really done a good job on the home office expenses website to help guide individuals as to what you can claim and which method will benefit you the best.
Mhm. Yeah, so I would say to everyone in attendance today, be safe, calculate under both ways, and that's how you'll know for sure. Historically, I have found when I was an employee and trying to figure out, should I claim my employment expenses when I was receiving a T2200? And each time that I did all the calculations and I had my mileage and all this fun stuff and taking the time to figure it all out, tallying up all my receipts, and then I would see that it would save me $35 in taxes. I just said, forget it. It was just too much work. And then, risking a potential audit, you get an audit one day and then CRA is asking for the backup. But if it's a valid claim and it's a substantial dollars, then, it's worth it to go through that process. So I think each individual situation will vary, and it's a good idea just to consider your specific facts. And if you have some time to try under both scenarios and see what's best for you, we're also here, of course, to help you do that. Yeah, so thank you so much. Okay. Does anyone else want to ask some questions? Miguel, do I see you asking here a question? Okay. I can't hear you, Miguel. If you could unmute your microphone. Well, it's COVID time, so we have technical difficulties, right? It's one of those times. Okay. Well, you can in the chat, you can post the questions in the chat box, or we can always chat later, Miguel, and you can email, whatever you prefer, whatever you like. Okay. Yes. So lots of fun, right, everyone? Oh, CRA has been keeping us on our toes, that's for sure. Feel like every week there's some new legislation that's posted, new legislation that's not 100% clear, and but we're dealing with it and handling it as it comes, and trying to be as prepared as we can for you to help support you during these times. Okay. Yes, we will be emailing this webinar out afterwards, and it will be posted on our website, Nisha. Okay, then. Well, I guess at this point, we're going to end the webinar. Thank you, everyone, for attending. This was wonderful. We'll be having some more of these this coming year, of course. And why not finish the session with a little bit of music from the Beatles and the Taxman? Thank you, everybody. Have a wonderful day.
Hi, everyone.